What is up, boys and girls, ladies and gentlemen, day traders, cloud swing traders? Hope you guys are doing absolutely fantastic. I think there was a little confusion, I guess, on the schedule. I'm not sure, but I'm filling in. So I'll be rocking with you guys, I believe now, I guess from now till two. So we'll see what happens. We'll see what happens. But you guys are incredible. Let's see who we got piling in. Make sure everybody got to work safely today. We got Al in the house. Good morning. We got Albert Bell, Bill, Brian, Sydney's in the house. Good morning to David. We got D, Frank, George, Julie. Good morning to Jason, Jay, Joe, JT, Lucian. We got Marius with us. Good morning to Martina, Randy, Rock, Ryan, Stephen Wong. The squadron is in the house. The squadron is here. All my peeps in YouTube land. Good morning to all you guys. Good morning to Eric, all the lurkers in the background. Make sure you guys hit that like and subscribe button. I don't even know what to say about the market. I'm speechless. I'm speechless on this market. Which is a first. First time in my life. I don't know. So we were I was on with you guys from 4 to 5 last night. Actually 4 to 6 doing the afternoon room too. So some of you guys heard my thoughts on the afternoon room recordings were live. But I think the real life reactions were better. We were watching the earnings come in. We just saw Amazon. Let's pull up Amazon. Let's just go through the narrative real quick. But we had Amazon come out. They absolutely crushed it both on retail. Their AWS was incredible. So huge gains there. That's helping to give strength to anything else cloud computing related. So check Mongo Database, check Net, check any of those companies that have cloud computing. Big numbers on Amazon. Right now, and I guess we'll go through some levels for right now, but just monster gap. We are above pretty much all support. A little bit into this range, we get a little chop, and we'll have to see where this thing opens. Right, and we're not at all-time highs on Amazon, so we're not quite there yet. From yesterday's candle, it is technically a big retest gap. I don't know if I'm going to play Amazon today because it is high. I mean, that was a pretty big monstrous gap. I really don't want to play it short. And I'll go through the meta the same thing. I know it's high and everybody wants to go, hey, I want to go short because it's up a lot. I would just be careful. Like I don't even know if it's worth risking the R. If it comes down a little bit and starts to throw in some kind of double bottom, I'd rather play the direction that we're in now. The earnings were absolutely incredible on it. So they came out, I believe, first. Then we got Meta coming out. He went all lizard boy on us. Zuck went all lizard boy. He got all crazy. But advertising revenue was good. We just had Google come out, I think it was Tuesday, and they were a little bit softer. So I think that gave the runway to Meta where you didn't have maybe as high expectations. You had a little bit of a free range to be like, okay, if they do good. But they killed it. They crushed the earnings in terms of advertising. They beat on earnings per share. They crushed it on revenue. And then he throws in his little magic. I'm gonna do a $50 billion buyback. Plus, we're gonna start a dividend, so you get 50 cents a share if you own Meta. So now you're attracting some of the dividend investors. You're increasing value, and I think the $50 billion buyback is actually more impressive than the 50-cent dividend, but you're still getting a little extra something, kind of like Nvidia. You don't get much, but you get something. But now you're tracking the dividends, you get the increased value per share just based on the buyback, and you're now gapping well into all-time highs. Again, this is a tough range to play because I got no levels whatsoever. Technically, a little bit of a retest gap from yesterday. I don't think that little candle yesterday matters after this gap. And I think the strength probably remains strong in Meta. And I think most or all dips probably continue to get bought up. So we'll see. Again, I really don't want to short it. I know it's up a lot. I know there's a lot of room to the downside. It's at all-time highs. It gets a little tough to play, but I think the play is really by the dips if we could get any. So we'll see how that wants to play out. But then we have two strong companies come out, and then 4:30, 30 minutes after the market closes yesterday, we get Apple. Normally, we were saying this in real time. Normally, the market is gonna, if Apple comes in weak, if Apple starts to lose some of the sales, the market's looking at it, and I was like, you know what? I don't think Apple matters anymore. Like in a true sense, Apple does matter, right? Over for the overall economy, Apple does matter. But I don't think we're really going to react off of Apple. I think if Apple comes in, I mean, as unless they come in and say, you know, we're shaky, we might not be in business anymore. I don't understand how Apple will really be able to affect the market. So they came in, their earnings were not great. They missed on pretty much everything on the individual breakdown. So here it says we beat on earnings per share, and then they're saying we got a $1.58 billion surprise to the upside. But each individual category, not great. Cell phones were down, iPhones were down, wearables, I believe, were down. So not a fantastic earnings for them. In terms of this one, this is a gap and go from yesterday. We're also clearing some decent pivots. We have the 200, so just be aware we do have that 200 right here, 180.09. And we'll see if that wants to hold. I think if we start to lose it, we drop a little bit further. If this market wants to reverse, I think Apple, out of all the tech at this point, will probably be one of the weakest ones, except for the fact that, and this is something that I think longer term investors might be looking at. Tim Cook did kind of put a little Easter egg out there saying, hey, we got some crazy things happening and stay tuned, but not really too much information as to what that was. So there's a little hopium, and it is Apple. They still made billions of dollars. Don't get me wrong. It's not like they're suffering. They got tons of money in the bank. I think if you own shares of Apple, you don't have to get too concerned. But could we see a bigger pullback? I hope so. I would like to buy more. As a long-term investor, you kind of want your positions to be down until you need to cash it out. So Lucian says killer earnings, big buyback, and the divvy. Yeah, good luck. Good luck topping yourself next quarter, Zuckerberg. I think you really did yourself in on this one. You could have did just the divvies this time and then the buyback next time. Unless he's got more tricks up his sleeve, I don't know. But we'll have to see. But then we come into today's non-farm payrolls. I forget the exact number. Emily, I know, posted it in Emily posted it in Slack. Yeah, so the the expected number for non-farm payrolls, 185,000. And then we come in with 353,000. So the good news is, yes, the economy is strong. Those are really strong numbers. Like that number came in, that number didn't come in hot. That came in scorching. Like that was a new level of heat that thing came in at. So normally the real world should be celebrating. Those are really, really good numbers. Wall Street, no, we don't want people to have jobs. At least not right this second. There's a point where we lose too many jobs, and then we kind of want to switch the shoe. But this market, in terms of macro, is just all on what does Jerome Powell do, right? And it's when's he going to raise the rates or decrease the rates? How long is it going to be there? He has repeatedly told us, but we have a bunch of crackhead buyers in the stock market that they're just I need more stock, give me some stock. Like no matter what happens, they're just out there. They're out there eating right now. So they're like, yeah, I know Jerome Powell told me it's gonna be no thing in March, but I'm gonna look for where he's lying to me. Like, you can just believe him. He's probably not gonna raise rates in March. But not only that, but that number might actually kick the can further, and that's probably gonna upset the markets too. So now I think maybe June. Maybe we don't even get one in June, and the rates kind of stay relatively the same for a lot longer. But we'll have to see. Obviously, we got some more data in the next couple months and things like that will come out and maybe change some narratives. But the markets aren't going to like that, because we do have the they're not going to get their I don't think they're getting their 6 rate cuts. I don't think they're getting their half point cuts that they're expecting. I think we just got a bunch of people who are sipping on some hopium, sipping on some Kool-Aid. But we will see. We will see. But SPY, a little bit of a gap up still. I mean, everything is tech. Everything is tech. It's either you're in tech or you might as well just put your money in a treasury. And that's about it. Little bit of a gap up, so SPY still kind of maintaining. Look for this level here for resistance. We did hit an all-time high last night after hours. Tech kind of took us over the edge for the SPY. I don't think the Qs yet. I'd have to check that one. I didn't really see that one, but SPY, we did hit a new all-time high last night. So that has sold off on the news. Again, we're still holding some decent levels. Really good close yesterday. I still want to be more bullish than bearish in this market. If we come down a little bit, look for 488.21 as some type of support. Look for resistance at somewhere around 491.06. And maybe we chop there for today. Again, the macro picture of things, the markets don't like it. They're bearish, but now they don't know what to do because you still have all of tech extremely strong in every stretch of the imagination, especially if you do anything in chip land, especially if you do anything AI or cloud computing. We got the Qs opening at some type of resistance. Again, we are gapping up from yesterday. This is a retest. I would say there's probably, because and I think we get a little bit of somebody wanting to take profits on Meta. Somebody wants to take profits on Amazon, at least at open, but I think there's a ton of people still looking to buy. So this would make sense if we do come back. Some of those bigger companies start to give back some shares. Again, I don't think it's people shorting. I think it's people taking profits. So let's see if we come down a little bit. I have a level over here that would be somewhere in this 420.29 zone. So see if we come down a little bit, retest. I do have one other level here, which is 422. So maybe, but I think eventually this thing gets bought up. And even if we close as a red day today, I would still be looking slightly longer term for bullish moves in the market, but we'll see. If he flips and not only doesn't lower but decides to raise, the little black swan in the market is still regional banks. And I think if he was to do a rate, honestly, if he does a rate cut in March, or probably anywhere before June, I think the market would actually be more worried about that rate cut because he doesn't really need to do it. And the only reason he would do it is if there's actually some weakness in regionals, some weakness that he's seeing, like, all right, this industry could collapse. We got to start to lower the rates. I actually think that would be a negative sign for the markets. I would actually be okay raising the rates some more. I honestly, the market's going to hate it, but I wouldn't mind doing it a little bit more. I think he's got the room to it. He doesn't have to lower it yet. All right, let's check. We got some tickers coming in. Let me know if you guys have some. But we got Airbnb for a swing trade. The trend has been bullish. We've obviously are sitting at a pretty big long-term resistance. I actually think real estate, I think real estate in general, I know this is not real estate, but in a weird way it is. I would look at it twofold, right? So one, you have the people that own the houses, right? And this is just more of a general concept, but I think once those rates start to lower, or at least the expectation of them starting to lower, I think more people are interested in buying houses, and I think that drives the prices higher. So I think the people that own Airbnb, they have a reason to do it, even just for appreciation on the asset. And then we just saw the jobs number come out. There was a lot more jobs in the economy. That means individuals have a lot more money and the availability to travel more. And I think overall, longer term, that probably plays out well for Airbnb. The valuation's a little high here, but everything is bullish. We almost have an interesting little head and shoulders on a longer term basis. So we got left shoulder, we got the head, we got the right shoulder, we have some kind of neckline right here that we have to break through. So I would actually be a little bit more bullish on, still just trying to take bullish trades on Airbnb, which means my next spot is I have to find my location where I would like to get in if my analysis is going to be correct. And for me, that would be kind of coming in with some Fibonacci just on this little pullback here. So I would say we're going from here to here. And we're not at the 50% retracement yet. We're getting close. But I would look for, I think the 618 is a great spot. This 139.78 if it gets down there. That also lines up kind of with this double bottom neckline. But for risk to reward purpose, yeah, 142.42 would be decent. Otherwise, I would be looking into here. If we start to break down these candles, we start to get these moving averages to flip. If the rest of the economy doesn't look as good, then maybe we'd want to take a short on it. But for me, I'd still want to buy the strength, and it's definitely had some strength in it. So somewhere around, I'd wait for it to come down a little bit further before I was interested really in kind of a swing, and I don't want to, for me, go short on it. DWAC. DWAC, zero fundamentals behind DWAC. There's only one man, one myth, one legend, the Donald Trump. Yeah, this is gonna move on. This is gonna move on Trump. That's it. Anything that looks like he is closer to the White House, whether it's some more primaries or some people dropping out of races, or I don't know what the other potentials are, but really, this is the company valuation is way off. It doesn't make any sense price wise, so it's not a long term investment. For a day trade, it could trade like other things. The nice thing about this one is there's days this thing will put in good ranges. That's a decent pullback. We still have all that volume that came into this candle, so that one's not taken out yet. I would probably look to see if this is an S curve if you want to kind of carry that thing up, but you get one Trump headline that might be negative, and you'll see this one probably just end up imploding back down, and then good news comes out. So it's very, very political central. Just be aware of what you're getting into. But it does have good ranges for day trades, swing trades. As long as this volume's not breaking out, at least you're not trapping people that kind of took that last breakout. This looks like a healthy pullback, good consolidation, and maybe get above like 42.33, something like that. Matt says, great call on Carnival Cruise. Now we could actually go on a cruise together. That's how this works. That's fun. Good morning. Unrelated question. What kind of earnings should we be expecting after 2 years of learning? That's up to you, Ferris. That is up to you. Here's my analysis. This is a good question, and I don't have too many tickers coming in yet, so we'll just kind of see how the market opens, but this is a good opportunity to kind of cover this real quick because there's a lot of new traders out there. After 2 years of what kind of earnings should we be making? So I'm guessing you're saying earnings is in terms of money. Okay. If that's the case, how much money do you want to make? If you're starting in 2 years, you're saying, hey, cool, I'm putting $10,000 in, right, to the stock market, and I'm going to get, if you're living in the U.S., you get the PDT rule, PDT rules, where you can only trade like 3 times. That's obviously going to prohibit what you're trading, how you're trading, as opposed to if you have 100K into an account, right? Just in terms of what your risk to reward is, you're obviously going to make more money if you have a higher account. That being said, if just because you put 2 years in, what are you doing during the 2 years? Right? Are you just paper trading accounts, or are you taking other online classes? Are you doing, like, how often are you back trading during those 2 years? So it's a loaded question. But to be honest, I wouldn't be worried at all about the money portion of it. I would be more worried about the trade portion of it, right? If you track every single trade that you take, and for you, let's say you have the first month, absolutely horrible, you lost 10 hours. Can you dig yourself out of the hole? Of course. You could even lose 8 hours next quarter or next month. Yeah, you're not feeling too good, but guess what? You had really good progression, right? And if you could build that trend out, you start to flip positive, and you're not competing against me. You're not competing against Johnny Maloney, Stephen King, Jeremy Newsom. You're the only person that you are reliable and have to report to is yourself. And if you can continue to grow yourself, the account size will grow with you. And I mean, there is no limit to what you can make in the stock market, but be careful. There is a limit that you could lose in the stock market, right? Which would be your entire account. So it depends on your strategy, your trading, how often you trade, what hours you do. So it's a very, very tough question to be like, hey, yeah, you're going to make $17 million in 2 years. I do think that it takes, I think in 3 years, you become a pretty good trader. And then I think in 5 years, you become a very good trader. So it takes time, right? And just kind of stay that course, and I think you'd be good. All right. Hope I answered that one. Win says, in my opinion, it's about time. It's not about time. It's about screen time. Yeah, I 100%, 100% agree. Yep. It's what you do during the 2 hours. And are you sticking to your plan, or do you do 6 months of sticking to your plan and then you take 3 crazy trades that wipes out your progression? I've seen it happen. There it says Tesla. Yeah, Tesla's probably still a little bit weak. Let's see. Yep, still inside yesterday's candle. So again, if nothing else, good risk to reward. There's zero strength on Tesla right now, though. So if the rest of the economy goes, yeah, we want to factor in some of these macro data numbers and jobless report or the non-farm payrolls. I think Tesla probably slips a little bit, but watch, at least from yesterday's low, you have a good risk reward. I wouldn't probably take that one. I think we can get a little bit lower. Look for maybe some kind of sideways trading, sideways chop. See if we could hold like 183.12 or better yet, 181.70. Those would be my next levels. Otherwise, we're still in a mini downtrend. I haven't seen anything that says we could probably rip higher from here yet. So just be very careful on going bullish on Tesla. If this one comes up to about 187.29, that might be your opportunity to probably play some kind of short on this one. Otherwise, you guys are incredible out there in YouTube land, and we will catch you